Going on in the markets this week was a pretty good week. We ended up closing out three different positions, one with our ACS strategy closing out SPY for a 11.4% gain. We also closed out SSO for a 23% plus gain and QLD for a 32% gain as these markets continued to push up, and the market is showing some signs of turmoil, of some weakness. Now they're rebounding. We saw over the past yesterday and today, we're starting to see that push higher, and that is the Magnificent Seven really having some big, powerful moves here. If we take a look at Apple, a couple of these other big plays here, you can see a big pop there. Apple talking about they want to put in another $1 billion or something like that into the United States for production. Of course, any news on a stock generally lures more people in. And of course, if Apple moves, it is a heavyweight. It's going to move the market higher. If we take a look at Amazon, big pop there yesterday, also moving the market higher. We saw Tesla up as well. Now, Tesla doesn't look as big of a bar, but again, it was still percentage-wise, it was a big move up. And that also helped drive the market. It looks pretty small when you compare how volatile Tesla has been. I mean, it's fallen 55% this year pretty much, and now it's rebounding back up. So this huge moves dwarfs a lot of these smaller looking moves. But again, this move overall from the previous day, still a significant day for the stock, up 3%. It just shows how volatile this play is. And I talked about this in a video earlier in the week. One of the members got into a trade, I think it was PBW, and it slowly rolled over and went against them. And this was their own discretionary trade. And they were shocked at how fast it moves. They didn't realize how much it could go against them. Let's just pull it up here. PBW. If you take a look here, again, the market moved back. Now, this is typical scenario where most people usually, as price starts to take off, it lures people in. And of course, it had about 11% pullback or 13% pullback in price. But if you go back in time and you just look at just any other of these pullbacks, you know, there's a 14%. Here is a 18%. Here is a 16%. A 26, even these smaller ones are still 13%, equal to this smaller one here. Now, in a falling market, it tends to go down more, and the bounces tend to be smaller to the upside. In a rising market, the pullbacks are a little bit smaller, 10 and 13 versus 15, 18, 25 type thing. But when you're trading something, guys, make sure you go back in time and look what the average move up and down is, percentage-wise, and just take an average going. This thing on average moves 15% pretty easily if it goes against me or with me, and if it bounces, it has a certain percentage move. So that's how you just get a quick gauge of how much volatility, how much risk and potential a particular play has. So we've seen that across the board. Amazon, all of these big heavyweights having big pops, driving the S&P 500 and the NASDAQ higher yesterday. Now, Microsoft had some strong numbers a few days ago, and we saw that huge gap up, followed by an endless stream of selling. It still has this giant gap. This, in a lot of cases, can become a massive reversal signal. So for all we know, we could end up seeing Microsoft really fizzle out and move lower. And again, as soon as there's just news on these big stocks, a lot of people just go in and chase them. I think it was Apple talking about moving tons of money and production over to the United States. And in the grand scheme of things, I don't really see that as being a bullish sign myself. It just means products are going to become way more expensive for everyone. There's going to be smaller profit margins, all of that. They're trying to get away from China to some regard, although I don't think they can. But anyways, it's just the market's moving, and we have to see how things are going to unfold going forward. So let's just take a look at the overall market. We do have the Russell 2000 up 0.8%, so it's having a rebound and a bounce back up. The Dow is up 0.4%, and all the indices are having a bounce. And I think a good chunk of it is people are still bullish. They're in buy the dip mentality. And the Magnificent Seven stocks could be enough to drag up this market and potentially kick it back into an uptrend. We'll have to see how that goes. But we have closed out of the markets with our strategies. If we take a look at our NASDAQ trade here, you can see we got long here. We closed it out a couple days ago. The SPY trade, we closed that out as well yesterday. And so now we just have to see how this market goes. We've repositioned ourselves. The bond market, we do have bonds trading up a little bit. They had some pretty big volatility yesterday. You can see this long lower wick. You can see it on the 10-minute chart down below. Huge sell-off. This probably had something to do with some news. Probably has something to do with interest rates or something. Let's just take a look at the 10-year. The 10-year had a big move there yesterday as well, spiking up, which means if it spikes up, then bonds are probably going to spike down. So obviously we got a big shake up there, and I think that has to do with some statistics, some data, economic data, or people getting shuffled around the Fed and labor statistics. I don't know. There's all kinds of weird stuff going on. But just to, we just kind of ignore most of this stuff. It's just blips and dips on the charts, and we just have to continue to focus on the overall trends of things. If we zoom out on bonds, yields, they're holding up and they're actually still bullish. Bonds are the flip side of that. They've been selling off and they're trying to find a bottom, and they may have found a bottom, but they could still take, who knows? They could even trade sideways for another year of no real return there. So that's kind of where we're at. So if we take a quick look at the VIX had a pop a couple days ago as the stock market started to break down. People started to panic. They bet on falling pricing. We have now the market starting to rebound and move higher. And of course, the VIX is fading back down. People very quickly have a quick spook. They get bullish again, and the markets are pushing up towards new all-time highs and trying to get people sucked back in. So we'll see how that goes. Again, we rode this last market trend up for the last several months. It was a very nice trade. Now we need to let the market reset and tell us what's going on before we get into another exciting move here. But we are really only, again, a day or two away from that. Now, if we take a look at utilities down yesterday. We were seeing them pull back. They were a little overextended, really rallied to the upside, having a bit of a pullback. Today, we are seeing gold have a nice move up. So this is, to me, is a warning sign. Gold's moving up, saying that this rally that we've seen in the stock market the past 2 days, that's pushing things higher, especially because they're really just driven by like 2 or 3 stocks. It might not be the real deal yet. We'll have to just see. But gold is saying, hey, people are moving to gold as protection. This is our kind of a leading indicator. The market's maybe getting very close to a breakdown and rolling over in a much bigger way. And the market is just trying to suck people in. But we'll just have to see how that goes, and if the market actually has real strength behind this move, or if it is just a bounce. But gold is holding up and on the verge of breaking out. And right now we are in a defensive play that's just going to generate us some money while the market's trying to figure out what they're trying to do. And we're just going to wait for another good trade setup to get involved in something more active.